Joining us right now to talk a little bit more about this is Stacey Widlitz. She is the president of SW Retail Advisors. Stacey, what's your reaction to this news?
Good morning, Becky. I'll be honest, I think I'm a little surprised that there wasn't somebody from the outside coming in to take a leadership role. I think that's part of the stock reaction here. And I think, if you look at, Joe, you're talking about the reaction to DEI, it's a narrative. A lot of companies have talked about that. But the bottom line is Target is losing share in more than half of their categories. In addition, it's been talked about at length that the stores are a mess. They're in disarray, inventory shortages, labor shortages because they're reallocated to the back room to fulfill because they're fulfilling from stores. So there's a whole host of things going on internally from an execution standpoint.
That they knew about 3 years ago and we're going to fix.
Exactly, Joe. And I think, you can listen to 2 years of we have too much inventory, we have too little inventory. We had a DEI mistake, we unraveled it, and the other side came at us. But the bottom line is Walmart comps have been up mid-singles and Target's been down, they're down 2, but 3. There's something like a 7 to 8 comp point spread between the two, and I think tells the story. And Becky, of course, you pointed out very importantly that this is a traffic issue. If you look at Walmart, traffic's up. If you look at TJX, traffic's up, and Ticket. Target is losing traffic, particularly in stores, and that is a result of what you're seeing in the stores, whether that's at execution or the inability to get product because everything is locked up.
You're right. You got the CFO coming in that was there, and that's probably what it was. He's 49, so it's not quite, kind of between 40 and 50, right on the cusp.
Stacey, who else is stealing market share? Is it just a Target versus Walmart story, or are there other retailers that are taking a piece of this too?
I think a good chunk of it is Walmart. If you listen to them, they're talking about the majority of their comp growth is coming from the higher income consumer. That's the target consumer. Of course, it's coming from Amazon, and it will be coming more from Amazon as Amazon rolls out fresh food increases same day. And, Becky, I would point out that if you look at Kohl's, Target was gaining a ton of share from Kohl's during COVID because Target had food and consumables and Kohl's doesn't. That has stopped. Kohl's comps continue to decline at a significant pace. Target should be picking that up. That is their natural across the street competition, and they're not picking that up, I think, which tells you a huge amount about the lack of execution and the lack of traction here.
The idea that the staffing issues that you point to because they're trying to fulfill online orders or these next day orders from the stores directly, that was their point of pride during the pandemic, and it's actually still been the thing that's been helping them even with these most recent numbers. The reason the comps were only down by 1.9% is because those same-day delivery was much higher. I think it was up by more than 24%. What do you think they should do to address that? How do they get their arms around that when it's been the one thing that's still been driving their growth?
Becky, you're right. It's been absolutely a home run, particularly during COVID, to the ability to, curb pickup, and that ease for the consumer, same day delivery. And that has been growing significantly and driving digital. But I think, again, if you look at the store comps, they need extra labor. And it becomes, unfortunately, at a time when their sales are declining at such a pace. And also they've been promoting more to move merchandise. Most retailers right now are promoting less, not only because of the tariff impact, but because a lot of them have just gone full price and they're sticking to it, like a Tapestry, like a Ralph Lauren. Target is still pushing product out the door through promotions. So, I would say unfortunately, it's a labor issue that the stores need to be cleaned up.
So it's an issue of where or how they protect their margins at a time when you also have higher tariffs, and they're saying they don't want to pass those costs on to their consumer because they're worried about losing even more traffic.
And that's a really tough situation because, as we know, a lot of the inventory that you see in the stores now and even back to school was pushed forward when the tariff original impact was announced. Now we're rolling into holiday and beyond, where those prices are going to have to come up, or you're going to have to sacrifice margin. And again, for a company that's already promoting to move stuff through the stores, that's a very tough situation versus other companies that are full price and even able to pass on a little bit of price increases to offset the impact of tariffs.
So you don't like the stock even with the declines that you see today and that you've seen year to date?
Can you tell? No, no. I have been negative on the stock for a while, and that was really based originally about 2 years ago when I saw the stores really change. It used to be clean and exciting and fresh brands and execution, and that has just all changed in the past 2 years. And we've heard them talk about how they're going to fix it, and we haven't seen it. And again, I think some of the stock weakness is a surprise. Maybe there's not some fresh perspective from the outside.